Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng down 0.8%. The Taiwanese index trading above the flat line.
Deliberations on exactly what tomorrow will look like are still ongoing. There are still meetings scheduled today.
Now, the Nifty's managed to hold on to 23,142 yesterday.
There could be a pretty interesting buying opportunity from April 3rd and 4th and onwards.
23,210 is where the Nifty is at, about 1/3% higher.
I'm still as sanguine and optimistic about the business.
Better sense prevails as it should. Reciprocal tariff should not come.
The benchmark indices in the green with a gain of about 0.6, 0.7%. The Nifty is above 23,300.
India's crude oil imports from the US rose 67% on month-on-month basis to 244,000 barrels per day in March.
India has offered to bring down the average tariff rate down.
The new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least.
The Nifty at the highest point of the day. We take that considering the uncertainties that we are surrounded by currently and of course the sell-off that we had in yesterday's trading session.
Well, that is the day so far, and the market is doing well on a day like today when the big talking point is only going to be revealed later today, and it is going to be a reveal, literally like a product reveal, reciprocal tariffs reveal, because so much, hand-wringing about what is to come and a lot of commentary, but no one knows.
You know what the event is called?
Liberation.
No, that's Liberation Day. Make America wealthy again. It's Mawa now, after MAGA. Yeah.
But the risk is not what comes out, right, today? It's the risk is that things linger on.
Yeah.
You hear one thing and then what will be the retaliatory tariffs other trade partners will impose, what kind of inflationary impact. So the question is, will this unleash a trade war or will there be a climb down? All we know is that the announcement is going to be at 1:30 p.m. India time, 4 p.m. Eastern time. I think that's the only thing that we know for sure. And
I think I'll go with Prashant's word. He's been saying, will this be a clearing event? I don't know why. No scientific reason behind it. I get a gut feeling, I'd want to believe. I think the markets would want to believe that it indeed is that.
No, I think so too. The risk of being proved immediately wrong. I think we probably get a relief rally tomorrow.
Yeah.
It may not last because tariffs ultimately are bad. There's no question. But it's just that, the event buildup has been so large.
Yeah.
Just to complete the arc, so to speak, we get... maybe we complete this at least for now with a bit of a relief move, but we'll see. We're of course here in the studios. Nigel is joining us from the newsroom floor. Nigel, hi, good afternoon.
Hi, good afternoon. Good to see, right? You are seeing buying into the markets, but I think the most encouraging aspect in today's trading session, Prashant, I recall when we started off trade, we were highlighting how the breadth of the market isn't great. Guess what? We have 3 stocks now advancing in comparison to 1 stock that's declining. So I think that's the highlight for me. It seems that the broader markets have got their mojo back, and hopefully President Trump doesn't announce something that's too negative. I guess that could continue.
No, absolutely. And, we'll see what comes out of it and what really happens. But at some level, the bar for a relief rally, it's counterintuitive, but the bar for a relief rally is actually, I would say, is quite low. In the sense that you just want to get over this, at least for once. But the point is, beyond tomorrow, if you get that, will it last? Because then you will again, at least globally, you will start to go back to the question of economic data. In the US, we've had many prints which show that activity is slowing, but inflation expectations are rising, et cetera, et cetera, et cetera. Here in India, of course, it's a waiting game, a couple of quarters. These tax cuts will take into effect. RBI 9th of April is the monetary policy meeting, maybe a rate cut here. So all of that needs to start to happen. So it's not, it's just, maybe too much concentration of what just happens tomorrow. But it's possible we get that. For now, 23,300 is where we are at, 140 points higher. And big move on the currency. It's a 14, almost 14 paise, on the currency. And the yields, you look at the India 10-year bond yield, and Lata will join us in a little bit to talk about that as well. That's a very, very sharp move that we're seeing there. So lots to track here over the next 60 minutes. We'll get you lots of opinion as well. Rima.
Well, Europe is in the red now. The CAC, that's the French index, is down about 2/3 of a percentage point. The DAX has lost over 1%. So European markets are a bit nervous. But back home in India, there is no nervousness. 23,300. And to run you through some of the big movers on the way up, many of the FMCG names. So Tata Consumer right on top, 7.5% at the day's high. Nimesh will tell us more about why Goldman is bullish now on Tata Consumer, but Titan, Britannia on the buyers list, and Trent at that. Innocent Bank continues to see buying from yesterday. Auto names like TVS Motors, Maruti up nearly 2%, and IT is having a good session led by Tech Mahindra. Even though the Q4 numbers are likely to be subdued, IT stocks are higher. On the way down, you've got BEL, that's the top loser, down 3.5% today, 6.5% over the last 2 days, as the street is disappointed by the overall FY25 performance. And considering where the valuations are, stock has taken a bit of a knock. And other losers include Ultratech, Power Grid, Nestle. HCL Tech in the IT large cap space is under pressure, and that's because of the JP Morgan downgrade.
Yes, so those are some of the key moves and shakers. BEL falling because they've missed their order book guidance for the year, bit behind the curve. And the market doesn't like that, especially when you have other defense majors really piling in the orders. So that's why that stock is under pressure. But look at the broader market. The broader market is behaving as if it's already moved on beyond the event, beyond the 2nd of April. Because there's such action in individual names. Kalyan Jewellers, let's pull that one up. 9% higher, suddenly drawing in a lot of momentum in the last hour and a half or so. There we go, days high on that stock. Look at V-Mart Retail. We caught up with the management in the morning. They were sounding confident. Fourth quarter is even better than third quarter. 17% growth in terms of the top line, 8% same-store sales growth. And the stock reaction is on your screen. CSB Bank, again, a stock reacting very well to the fourth quarter update. By the way, once again, I'm just looking at bazaar-style retail because same time yesterday, this stock was, really on a flight. And today it's up 20%. So there's some serious buying going on in this small cap name. Many such movers and shakers, actually. Look at Galaxy Surfactants, for instance, 8.5% on the upside there as well. So largely speaking, the mid-cap market is alive and kicking. And Nigel, I completely take your point. I think traders want to believe that the worst of this uncertainty is over and then it gets better from there. The only caveat is this FPI selling number. 2 days running, it's very heavy-duty selling. And that ends up souring sentiment in the broader market. So if that continues, it could be a bother. Let's see.
I agree, absolutely. That FI sell number is something that you'll have to track. For the time being, it seems that the domestic money is doing what it can do. You're waiting for the outcome of what President Trump is going to say. But I think from tomorrow onwards, we'll have to track the FI number. Maybe they're lightening some positions ahead of the event. But let's see how this goes from here on, because in the last few trading sessions, they were showing signs that they want to come back into the Indian markets. But a good session, I'll say, for today. Midesh Thakkar joins us. Midesh, well, the markets are doing quite well. And the Nifty Bank is now up 450 points. It's back above that 51,000 odd mark, which yesterday it broke. What's your view on both the Nifty as well as the Nifty Bank? Or would you take a call today that is too much volatility? You want to, exit positions and not take a position on the Nifty and just keep it on stock calls?
See, I think I wouldn't go with the idea of too much volatility, Nigel. Good afternoon. Purely because of the fact that, my sense is that this is a market which is positively biased. We had 2 days of some kind of a negative movement. But now I think, the market is playing catch up nicely. And therefore, this is a time to possibly maintain on to hold on to your long positions. And let's hope that, the up move kind of continues and extends. So my sense is that stay long. I think today we've got the bounce back, which I was looking for in the last 2-3 sessions. I have a buy on Indus Tower. Obviously, Idea news yesterday was good, but then yesterday markets fell, so it came down. But today it's picking up steam again. I think this is heading towards levels of around 375, 380. So buy here with the stop at 355 or just below it. And IRB Infra is another one that's a buy as well. Keep a stop just around levels of 45.5. Look for targets of around 49.5.
Okay. All right, Midesh, got it. We'll come back to you with some more questions in a bit. Before we talk more equities and, of course, individual stocks and ideas, let's talk about the money markets because we've seen, very clear weakness in the rupee. And bond yields have had a really sharp fall, almost 10 basis points. And this after the RBI decided to go ahead with an 80,000 crore rupee bond purchase in this month. This, of course, announcement came in yesterday. It's going to happen in multiple tranches. But that is the kind of liquidity that the RBI is going to be infusing in the market. This is just in April. Lata is joining in to make sense of this development for us. Lata.
A 10 basis point fall is rather unusual. So the benchmark 10-year now, the new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least of fall. And that is, as you said, because of this quite unexpected 80,000 crore bond calendar. Very rarely does the Reserve Bank say that I'm going to do one every week. And it's, 4 bond auctions of 20,000 crore each. It indicates a determination on the part of the RBI to keep liquidity plentiful. Actually, we ended the financial year FY25 as well with a decent surplus in the interbank borrowing market. What you call core liquidity was positive surplus by about 1.5 lakh crore. And the Reserve Bank coming proactively and saying we will be doing every week indicates that they probably want to keep the liquidity at a 2 lakh crore surplus. The market is reading this as extremely dovish because that means they will be dovish in the monetary policy coming up on Wednesday next, April 9th. A rate cut was always factored in by the market, but now the market's reading more. Will they also go in for a stance change? The stance currently is neutral. Will they go in for something like, a more accommodative stance? Will the language change? And therefore, you are seeing a fairly outsized reaction in the bond market. But now the 25 basis point rate cut expected on April 9th is completely priced in. And then, of course, there are other small positives as well. The US bond yields have also fallen, and there is rising talk, including from Goldman Sachs, about a possible recession. So all that is also abetting the rally in the Indian bond market.
Okay, all right. Got it. Lata, thank you very much for that. So that's, of course, the local development that's driving up bond prices today. And, of course, tomorrow we'll have the big global queue to talk about as well. Let's take the conversation forward. We have Prakash Diwan joining us on the show this afternoon. Prakash, great to have you on. I want to start first with Tata Consumer. In fact, I think we'll have Nimesh join in just a bit with the highlights of that brokerage call. This is Goldman Sachs, and they've said a bunch of things, including how the tea business will improve, and they're expecting better EPS growth as well in the next 2 years, FY26 and 27. What are your thoughts on the stock?
Good afternoon, Supreet. So I think what's probably getting factored into this positive note from Goldman Sachs is very clearly the fact that Tata Consumer in the last 18-24 months has been consolidating around this zone quite significantly. They've done a lot of things to kind of change themselves organically in terms of price points, in terms of product mix. There's a massive change in the last 2 years. So the first 2 years post the pandemic was like recovery. This is really kind of building themselves up for the next phase of growth. And that's it. That is something which will start getting EPS accretive. So my sense is that's what the brokerage house is talking about, or is trying to factor that in and explain to us that whatever changes they've done in terms of segment, and as you rightly said, some of the segments haven't deepened enough in terms of whether it's the mix or the price point. We've not heard of any innovations that they've done in most of these areas, that they potentially have so much to do, possibilities of doing so many newer things. The acquisitions that they've talked about, they've not been harvested fully yet. So, all that assimilation is probably now done. And then you'll probably see a very significant upside in the next 12, 18 months. But remember, a lot of the consumption expectations are built into because of the, this theory of more money in the hands of people. The monsoon should be decent enough. Some of the smaller ones like V2 retail have already, quadrupled in the last 12, 15 months. Given certain pockets where they are present, having done so well, whether it's UP, Bihar, thanks to Mahakumbh and all of that. So Tata Consumer is more of course, pan-India, so they'll have to wait longer to see all that benefit. But subject to that consumption boom, a pickup, let me not call it a boom as yet, but the pickup in consumption, I think they will outperform the broader markets, and particularly in the segment.
Okay, all right. Prakash, I request you to stay with us. Let's focus on a couple of those names itself. Tata Consumer, that's one of the big stocks in today's trading session, one of the big gainers. It was our stock on standout brokerage report as well, and that's clearly caught everyone's attention. Nimesh, run us through the details of the report.
So, as you said, we highlighted this in the standard brokerage as well in the morning, and clearly it looked like this will be the stock of the day. After a very long time, you're seeing an upgrade on a stock like Tata Consumer, and the reason for the big upgrade is the fact that Goldman believes that there's going to be a big revival in earnings for Tata Consumer. So, from a stock point of view, they've upgraded the stock to a buy from neutral, and they've raised the target price on Tata Consumer to 1200. Now, Goldman believes that the company is poised for a very strong EPS growth over FY25, FY27, and that will be driven by three key factors. The first factor is that recovery of tea margins, because they've hiked prices there. Second is strong innovation and distribution expansion on the growth businesses. That's going to be the key focus area for Tata Consumer going forward. And the third one is low interest cost, because a lot of the acquisition that they've taken, that's been paid down. So on back of all these three reasons, Goldman has increased the EPS estimate for FY26, FY27 by 3 to 7%. And Goldman believes that within the FMCG basket, Tata Consumer is going to report the strongest earnings growth going forward. So that's the reason why there has been a big upgrade, and we've seen a very big reaction on Tata Consumer today.
Okay, all right. Nimesh, thank you very much for that. It's a big one, right? I mean, it started off in a very, very strong way, and it sort of continues the move that it is seeing at this point in time. By the way, it's a day full of lots of movers. The biggest volume-led gainer this afternoon is Kalyan Jewellers. It's a 10% move coming through on Kalyan at this point in time. We already, discussed Tata Consumer, but look at Style Bazaar, which is up 20%. V-Mart is up about 11.5%. And a few others as well. I can spot KPR Mills, which is up 6.5%. These are all names which will be in focus. Prakash, you've discussed the outlook for the entire spirits industry more than a few times here on the program. How does this stack up in relation to tariffs? We charge 70-80% tariffs on imported wines and liquor, etc. Now, US is not the big geography from which imports come in. It's more UK, etc. Yeah. But what is your sense? I mean, what does it mean for if we are, as reports have been suggesting, willing to lower tariffs substantially? What would it mean to pricing here for incumbents, etc.? Go on.
No, that's an interesting space. Generally below the radar, doesn't get discussed much. As you rightly said, the significance is a function of the size, and that's not too much. But remember, some time back, we had tariff reduction, duty reduction in the bourbon category. And bourbon as a segment in India is too minuscule. I mean, except for some of the well-known brands, we really don't see much of things coming from the US. But globally, bourbon stands as the second choice to single malts. So it's like for whiskey drinkers, it's a choice between these two largely. It could probably be skewed at 60-40 or 65-35 in terms of choice globally. But in India, I think as a percentage, it's not even 3% of our IMFL sales. Non-IMFL sales. What happens is it opens up the gateway for the American industry to be able to supply a lot of other varieties, which we have not kind of seen a very positive response to. And this could eventually become a very large flow. It's something like California almonds. We've been having almonds all our lives, but the moment California almonds started coming into India in a significant way because of the favorable duty structure, they flooded the market. This could happen to some of these segments. I don't think wines is a great area from California to be welcomed here because there's lots of competition globally. But yeah, whiskeys, yes, and I think bourbon is the one that will stand out. So impact on Indian companies, I don't think Indian companies have to really worry about, because that segment is very different. It's niche, and then the hit will probably be with the Scottish imports. there, the big elephant in the room is the FTA with the UK. If that were to go through, you'll probably see a far bigger impact in India on liquor sales rather than the US tariff changes. So hopefully it won't be disruptive. Will probably be conducive. Will grow the market, and that's always good for either distributors or for the importers. There's lots of other people who will benefit if that happens. But I don't think it's going to be disruptive, negatively disruptive for the Indian players as yet.
Prakash, BEL, 7% gone in 2 days. The top line looked good, 16% growth last year, but the company achieved only 75% of its order inflow guidance. It's still a big number, 19,000 crore, but it fell short of expectations.
No, Rima, I think the expectations were too high. And to be fair, the order book swelling up in a very short span of time was something which is, you've seen that in shipbuilders as well. There are lots of shipbuilding companies which saw a very significant ramp up in order books, and then the execution, of course, takes its time. Fortunately, for BEL, there's much more shorter cycles in terms of whatever product life cycles that they look at executing. And there are a lot of, this whole new set of products that will also start getting eligible for export. So it's no more import substitution for BEL. And there will be a significant amount of electronics and telematics and all, informatic related stuff which goes into modern warfare. In fact, hardware is getting replaced by midware and software. So that's where, BEL could probably benefit. So I think any dip you see, given the expectation mismatch, is actually a good long-term bet to hold on to. In fact, it becomes a proxy to the defense play. Any order that you see getting outlaid by the government, BEL always has a share in that. So, whether an HL gets it or a GRAC gets it, it's not very sure, but a BEL definitely gets it. So I think from that perspective, the participation will be even better going forward. The conversion in terms of realization will be better. So I think it's a good buy on dips. It had run up, it's lost some ground, it'll probably go back to its earlier highs and even go beyond that. But you'll have to be patient because the segment is such, it depends a lot on the announcement from the government and execution thereof. So, but I think I would not be really worried with these numbers, just saying 75% of a very larger book that they've built up for themselves.
Okay. All right. Prakash, good to have you on today. Thank you so much for joining in and sharing the perspective on all the themes that we have discussed. We do have to take a very quick break. Come back on the other side and we'll have Rahul Veera from Nippon India AIF joining in with some perspective on the market.
Baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
Welcome back. Time for our special segment now, Midcap Microscope. Nigel today puts the spotlight on a stock that has outperformed the broader markets and is also near its all-time high. But the question remains on whether the rally can sustain.
Welcome to Midcap Microscope. The stock on our radar today is Welspun Corp. Remember, the stock has outperformed the broader markets. But is this rally justified? Let's break it down for you. Welspun Corp is a leader in pipe solutions. That includes the large diameter pipes, the ductile iron pipes, and the stainless steel pipes as well. But they've also expanded into building products after acquiring Sensex. So now they're into the water storage tanks, and they're also foraying into plastic pipes too. What's encouraging is, despite the heavy capex that they've lined up over the last few years, they have kept their balance sheet lean by the operating cash flows as well as exited non-core businesses. And that's what's helped them turn from a net debt company. Currently, they're in a net cash position. For FY25, they have guided for an EBITDA of around 1,700 crore rupees. But there are various triggers in place which could help them scale up this EBITDA number. Trigger 1, their order book is at a massive 20,000 crore rupees. And guess what? 60% of it comes in from the US market. And that, remember, is a margin accretive business. In the past fiscal, this US business did not contribute much to the EBITDA number. Trigger 2, 1,600 crore rupee expansion has been announced in Saudi Arabia for LSAW and ductile iron pipes business. They've already signed an MOU with Saudi Aramco, and that's a big deal. And looking ahead, well, Welspun is launching its plastic pipes business in the first quarter of next fiscal. Peers in this space, well, they trade at very, very hefty valuations. So if they can scale up this business, there could be some serious value unlocking. Finally, the company is implementing a turnaround strategy for its subsidiary, Welspun Specialty Solutions. That's post its rights issue. And now they have a solid balance sheet and good order book visibility as well. This segment could meaningfully scale up for future growth. So while Welspun Corp appears to have a strong growth trajectory, there are some risks that investors should be mindful of. A significant portion of its revenue comes in from the large infrastructure projects in sectors such as oil and gas, water supply, and construction. For example, the National Gas Grid as well as the Jal Jeevan Mission. Any kind of delays, cancellations in these projects could impact the earnings. Also, the success of its plastic pipes business remains a little uncertain. If the product launch is not up to expectations, it could impact investor sentiment as well. Well, before we wind up, let's sum things up for you. Welspun Corp has a solid order book. They're expanding into high margin markets. They're also eyeing new business verticals. So it's well positioned. However, execution risk and external factors could weigh. Will the company capitalize, or is the market being overly optimistic? Let's stay tuned to this one.
Well, it's very, very interesting. Welspun Corp, stock's done, relatively it's done phenomenally well because it did not fall when the rest of the market fell. And so in that sense has been an outperformer. Well, we of course will talk more about this and more, but let's welcome in our next guest. Rahul Veera is with us, Fund Manager, Equity Investments at Nippon India AIF. Rahul, good afternoon. Good to have you with us here. Before I come to you, I just want to quickly once again put out that table which we've been sort of discussing. This is sector-wise implications. We'll talk about the broader market, but let's maybe just focus our minds a little bit in terms of individual sectors where this impact may show up. And that is a table that we've been highlighting. Chemicals and pharma is a high tariff differential sector. Textiles and clothing is very large. And agri and meat products is another one which is extremely, the differential is very large. So, that's where there is, vulnerability is a little higher in that sense. Rahul, so let's just start with the tariff bit, right? Now, broader market, etc., we'll talk. But I think you do at the margin, like chemicals as a space, you see some opportunity there. What is your sense? That table just showed large tariff differential between what US charges, what we charge as a sector. And a lot of the chemical business is value addition at the end of the day, right? We don't make everything is not completely backward integrated. So we buy from somewhere, add value, and then sell, export, etc. Is it a space which gets hurt if tariffs are changed substantially? What is your sense?
See, overall, the specialty chemical market, right, globally is close to $700 billion. India is doing close to $35 billion of exports as of now. So even if 5% change happens, right, from a global supply chain perspective, there's an incremental opportunity for India. So from a perspective that China will also face some tariffs, which is one of the largest exporters, we would have an indirect second order benefit for India from a volume share plus market share gain. So from $35 billion, we can probably move to close to $50 to $60 billion. So very large opportunity for chemical manufacturers, which will be offset by volumes given the tariff structure that will come possibly on the Indian manufacturers.
Right. No, you're saying if tariffs on India are raised to say 10, 11%, it is positive for Indian exports.
So it will be benefited directly by China volumes as well. So the tariffs will also be applied to Chinese manufacturers.
Correct.
Yeah. So the differential between Indian tariffs versus the Chinese tariffs, there is still a large differential there. So the volume growth for Indian manufacturers will be relatively better off.
Got it. The only thing is that the cost of production in China is already low. Scale is much larger. They're much more backward integrated. And China, lots of industries receive state support. They may decide to do that, which is not the case here. So there are lots of variables, right? I mean, is it as straightforward?
No. So specialty chemicals wise, right, India is relatively better off. So whenever there is a chemistry, right, between volumes and value added, volume China is relatively better. Whenever there's a value add manufacturing process is concerned, Indian manufacturers are relatively better off. So whenever there is a little bit complex chemistry, right, Indians are relatively better off if you see all the competitive chains.
And which names specifically, Rahul, if you want to sort of just highlight a few names here in the specialty space?
Some of the fluorochemical manufacturers, right, where there is a consistent contract manufacturing opportunity is consistently increasing there.
Okay. And pharma also is another area which you like. Again, we don't know if tariffs will go up or not, but irrespective of it, you think it's a good. And US generics, yeah?
Yeah. So US generics export from India to US is close to $10 billion. Almost 40 to 45% of RX that is given in US, right? If the manufacturers are from the Indian manufacturers. We believe going forward, right, if there is a tariff increase, some of the molecules will be taken off by these large manufacturers given the low ROE kind of a business, but that will eventually be good for some of the other manufacturing companies who are doing large scale manufacturing of that particular molecule. So some of them will close down the exports to US, the other ones will start exporting all the more. So it will become more of a volume game. Whoever is large in particular molecule will do relatively much better now. Plus the pricing impact because of the lower competitive intensity that they will get.
Okay, hi Rahul, good afternoon and good to see you, Ben. Well, let's keep the tariffs out of the way for the time being. Let's focus on the domestic stories. I believe you like cement. What do you like from there? It appears that pricing hopefully has seen a bit of a bottoming out. Volumes, I understand, have picked up as well. But how do you play this theme? Because you have two large conglomerates in there that are fighting for market share. And because of that, we're seeing a push through of volumes. So give us your preference in that space.
Right. So top four cement manufacturers, right, are almost having like 65 to 75% of the regular capacity wise volume share. Now going forward, what will happen is a consolidation that had to happen from the mid-cap and the small cap space. Largely 70% of the possible acquirers are done. Going forward, a few names might be acquired going forward. So this consolidation over the next 3 years seems to be very positive. Also last year, given the low base of volume, right, 4 to 5% of volume growth that we saw last year, we believe the government capex will help push the cement volumes, plus the pricing impact will play out. So from a 1 year perspective, definitely the base impact will come into play. But from a 3 year perspective, the consolidation will help the industry overall.
Rahul, hi, afternoon. What else do you like? So if you're not too worried about India, the tariff threat and the impact that it will have on India, what are you doing with respect to your portfolio?
So we are very bullish on power sector. Right. So if you see the budget, right, the government allocation within the capital outlay of 11 lakh crore that they are given. So all the other subsectors, other than the power, whether it was rail, roads, or defense, had kind of a flattish outlay. Only power sector saw 14% of an incremental outlay YY basis. So we believe power sector is one of the themes that we need to consider from a long-term perspective. Also, if you see the overall policy for the government, right, there is a 9 lakh crore kind of an outlay over the next 10 years for the overall power distribution segment, out of which 3 lakh crore has already been tendered out. The other 6 lakh crore is expected to come over the next few years. Now, within this, we expect not the direct power generators, but transmissions, EPC players. There is enough opportunity over the next few years to generate decent alpha in the portfolio.
I was speaking to one of those players in the morning today, KC International. They completely, their outlook on the business concurs with your view that there's a lot of activity in the T&D segment going on. And they're beneficiaries of that, among other companies. Got that point. Rahul, let's talk about some of your other, preferred areas in the market. I think you like banks. You also like pharma. On banks, there's a big debate raging. There's this whole talk about whether credit growth will not pick up to the extent that one would have liked, whether it'll still be 10-11% credit growth this year. The other part of that debate is whether the best of the NIM phase for Indian banks is over, because you're just not getting low-cost deposits anymore. So then what will be the play here? I mean, what is it that will make bank stocks outperform the market?
Right. So see, if you consider NSE 500, right, the total profitability pool was close to 15 lakh crore last year, out of which 6 lakh crore, almost close to 40% the profitability pool comes from the banking sector. Now, for the past 5 years, even though the EPS compounding CAGR from 2019 to 2024 for the banking sector was close to 12 to 15%, but given the X of bank, NSE 500 companies were growing at 25%. So technically, the banking sector never got re-rated in the past 5 years. So going forward, again, X of banks, NSE 500 will be close to 10 to 12% kind of a PAT growth, but the banking growth will continue at 12 to 15%. So slightly better off than the lot of small cap, mid cap names will be continuing to do better. Hence, we believe that there will be considerable shift, even though the ROEs or the ROIs of the names are largely behind, but the valuation comfort is something that we are looking forward to. Now, on the credit growth, although the 10 to 11% expectation is pending for most of the street players, but we believe ideally 10.5 or to 9.5 will be the place where credit growth will take place. So a lot of the funding, right, recently on the credit growth side was directly done by the capital market itself. A lot of equity funding, QIPs prep over the last few years we saw. So that is kind of a slightly marginal impact on the credit growth that we saw in the industry. Then that will continue going forward.
Rahul, what about technology? Earnings is expected to be weak. FY26 is going to be a very subdued year in terms of growth, perhaps no better than what we had in FY25. Earnings estimates have been brought down, but stocks have also corrected and valuations have derated. So now how is the risk reward for tech?
The downside overall for the IT sector will be limited from here. So from the large cap perspective, 3 to 5% of the broader CC growth that is expected by the street. And for the mid cap names, 10 to 15% is the broader range. But the corrections across the large cap, mid caps has already taken place. 5-year average Ps are back to where they are. We believe downside will be limited, but at the same time, even upside is going to be very limited. We are overall underweight on the sector as of now.
Underweight on tech, no upside, no downside also. That's the view coming in. Rahul, thank you very much for joining in. We'll get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our experts.
welcome back. Just highlight a couple of stocks that have moved to the day's high. Sun TV, that's been a big underperformer. It's seen a big correction from the recent peak, and we've normally seen it around the 650 odd levels. It gets some kind of valuation support because of the IPL franchise as well as because of the cash in the books. That one's moved to the high point of the day. And the other one is BDL. Bharat Dynamics just came out with the release on the BSE. It appears, at least first look at it, the street likes what they had to say. So that is well seeing a bit of an uptake. But it's that part of the day where we get to D-Street Chatter. Nimesh is back with us. Nimesh, how are you reading today's trading session? It seems the bulls for the time being are going with an optimistic scenario. Markets at the day's high.
Nigel, a bit of confusing market for the last couple of days, right? Yesterday there was no reason for us to fall 300 points on the Nifty. Yeah. Of course, post markets we got to know that there was a large FI selling. Today we've recouped half of the yesterday's losses. But again, no specific reason for stocks to go up just one day before a very large event. So it looks like it's a bit confusing from a Nifty and a Bank Nifty point of view. But what is consistent is the outperformance in the broader markets. Even yesterday when the Nifty and the Bank Nifty was down, Midcap index was buzzing. I spoke about a lot of SME stocks were up 8-10%. So that trend of Midcap outperformance continue. Index is up 1.5%. The breadth is quite strong, and there is momentum in general in the broader market stocks, even in today's market. From a flow perspective, again, it looks like it's a mixed day. I haven't heard very large selling or a very large buying from larger institutions. So I guess it's a wait and watch out of the big event which will come out tonight. So I guess markets will react big time tomorrow on that tariff thing. So that's something to watch out for. Real estate as a space is doing good today, but I guess it's a combination of short covering as well as buying. There is a small buying is what I understand across real estate names, but I guess it's also to do with a bit of short covering after yesterday's fall on that Maharashtra news. So that's the sector to watch. I guess tomorrow a lot of sectors like pharma, IT and textile will react, and which we've been highlighting as well throughout the day. So nothing big to talk about that. But I guess at least from a larger institutional point of view, it's a wait and watch out of the big event tomorrow. All right, on Chatter, we want to tell our viewers, I'm lucky I cleared a couple of my doubts before Nimesh goes live. But Nimesh, which are the top stocks that you picked out for our viewers? Sure. So in terms of individual names, I'll start with a couple of pharma stocks. Well, of course, it's going to be a big event tomorrow. But for the last few days, there has been consistent selling in some of the pharma names, especially Dr. Reddy's, which has been selling for the last many days. And today, for a change, there is a selling in Aurobindo Pharma as well. So both these names will see high delivery-based selling. And that's to some larger FSMs to be selling on those names. So that's the first couple of stocks. The second stock is Paytm. That's been buzzing for the last few days. Even today's market, it's been buzzing in trade. The volume's on the higher side. I guess for Paytm, the street is anticipating that there could be some clarity with regards to the MDR. And that could be a significant trigger for Paytm going forward. So that's something to watch out for. Maybe something is likely in the next couple of days on that MDR front. So that's to watch out for there. The third stock is Delivery. This is going to be quite interesting. The stock has been correcting in the last many weeks now. In the last few days, you've seen a bit of consolidation, a bit of buying as well at lower levels, almost at 52-week lows now. But now I understand in Delivery, there could be a corporate development, a potential inorganic move is what I understand in Delivery very soon. So that's something to track there. And the last name is Godrej Properties. I spoke about some bit of buying in real estate names. Godrej Properties stands out in terms of all the real estate stocks. This is one stock which is well bid, the volume's on the higher side, and looks like some institutional interest is back in Godrej Properties at current levels.
Nimesh, thanks for that. By the way, hearing anything you've heard on Kalyan?
Well, Prashant, there is a lot of chatter going around about, again, a possible corporate development there. I'm not sure whether, in the cool-off period, whether the company can announce a buyback or anything of that sort. But that's the kind of anticipation which is there. And I guess that's the reason why you're seeing aggressive short covering in Kalyan as well today.
All right. We'll see if that comes through, possible or not. I think that's the buzz at least, but big move, about 11-12% or so, 510. Mitesh is with us with what to do in the near term, buy or sell for a reverse trade when we come back tomorrow. Mitesh, what does one do? Mitesh, you'll have to unmute yourself, please.
Kalyan Jewelers is one of the BTST calls for me. In fact, that's a stock which has done well and closing with some kind of a reversal sign today. So BTST here with the stop at 503 for targets of 522, and the other one is Jubilant Foods. I think that's also near the day's high. BTST here with the stop at about 677 or 676 and the target of 695.
Got that. Nimesh spoke about Godrej Properties, but generally most of the Mumbai-based real estate companies have rebounded after yesterday's fall. So Macrotech Developers 5.5% up. Oberoi Realty is also gained close to about 3% and the broader markets are picking up in terms of momentum. The mid-cap index is up 1.6%. The small-cap index has moved to the day's high, inching towards a 1% up move. But let's talk about IT. JP Morgan has come out with a preview note for Q4, and they're saying with the NSE IT index down 14% on a year-to-date basis, a lot of the negatives are priced in. They're going to play for relief rally in beaten down names. So their preference lies with Coforge, Infosys, KPIT Tech and Tech Mahindra. They're avoiding a TCS, Wipro, HCL Tech, Tata Tech and Tata Elxsi for the quarter. Two changes that they've made. One, a downgrade on HCL Tech to a neutral from an overweight. And the key reason is that Q4 is likely to be soft. Deal momentum has been a bit subdued, and therefore FY26 could see lower growth compared to FY25. They've cut the target price to 1700 and they've upgraded Tech Mahindra to a neutral, because here the premise is that when all the companies are struggling with growth and we are in a low growth environment, this is a company which is reporting margin increases. The company is on a margin improvement trajectory. From 10%, they want to bring it up to 15%, and that will help the overall narrative. So that's the call. Tech M up 2%, HCL Tech under pressure.
Absolutely, and it's the IT stocks in focus now. Trump's Liberation Day, the 2nd of April, is here. I mean, and investors, of course, are awaiting the tariff rollout. Let's actually get to you a more logistical piece now about how this is going to happen and when will we hear these tariffs, etc. This is Karen Zoe of CNBC Network with details.
We're now just hours away from President Donald Trump's tariff announcement, with America and its trading partners holding their breath. The White House has provided little detail on what to expect, but what we do know is this. Reciprocal tariffs will take force from today, immediately after the announcement. Treasury Secretary Scott Bessent has labelled this as a cap of the highest duty level, which could go down if countries meet demands. On Tuesday, the Washington Post reported that one draft proposal would see the US impose a levy of 20% across nearly all imports into the United States. A blanket tariff is a potential. Donald Trump will deliver his tariff announcement in the Rose Garden today at 4 p.m. Eastern Time. That is 9 p.m. BST, in an event that some are calling Make America Wealthy Again. Alongside reciprocal tariffs, there are further measures coming into effect from today. The US will place an extra 25% levy on countries that buy oil from Venezuela. It will also lift the pause on additional duties on Mexico and Canada, and the 25% tariff on all autos imported into the United States that Trump announced last week will come into force from today. So even complex on the detail we already have. Now, Europe is planning to retaliate. European Commission President Ursula von der Leyen has vowed to respond with a strong plan against the US, telling the EU Parliament on Tuesday that the bloc holds a lot of the cards in negotiations. Meanwhile, UK Prime Minister Keir Starmer has reportedly told cabinet members they should brace for tariffs to hit the UK from today, but that he remains hopeful of striking a deal down the line. Starmer has already signalled he's willing to pare back the UK's digital services tax on American technology companies.
Okay, well, Karen, thanks very much for that. We've been, of course, taking stock of sector-wise implications here. And pharma seems to be in a bit of a crosshairs as well. And lots of divided opinion, though. It's an essential sector providing essential medicines to the US. Will they really go ahead and increase tariffs for this? Some believe no. Others say, well, it's going to see tariffs going up as well. Vinny is here with company-wise data, exposure to the US and what could implications be at a certain level of tariff imposition. Vinny, over to you.
Afternoon, Prashant. So yes, in terms of India, as of now, as an overall basis, you see for pharma imports from the US, they do charge around 10% tariff coming in, while US doesn't charge any tariff, and that's where the issue comes in, right? So at the best, the highest that we could see a tariff that everyone was indicating would be around 10% that we could watch out for in terms for Indian medicines that are imported to the United States. Now, who is at risk and which companies face the most risk in pharma as a sector as a whole? Generic players players as well as in terms of CMO players. That's the contract manufacturing companies which face the most in terms of the risk that possibly one could see coming in from these tariffs. Other than that, in terms of exposures that one has, if they do imply and there is an implication of around 10% tariff, then there would be an impact of one-time EBITDA hit for most of these companies in the range of around 9 to 12%. Gland Pharma, that has the most amount of exposure to the United States, 50%. So the EBITDA impact on the company would be around in the range of 8 to 10%. Aurobindo Pharma is the second one, 48% exposure there, 12 to 13% would be the impact on the EBITDA for the company. Negative impact is what I'm saying, that they would take a hit. One-time hit is what they're saying, followed by Dr. Reddy's, Zydus, Lupin, Cipla, and Sun Pharma. But do not forget, some of these companies do already have a facility coming in, right? Trump wants to put these tariffs. Why? Because so that companies can open manufacturing over there, and manufacturing in United States is improved. So that is one factor that comes into play. So some of these companies who already have an exposure or already have facilities are Cipla, Dr. Reddy's, Lupin, Syngene, Piramal Pharma, as well as Sai Life Sciences. So the impact on these companies would be a bit lower. Even if they have to set up a facility or anything that comes on that front, then these companies have a better positioning than other companies.
Okay. All right, got that, Vinny. Thanks very much. So, awaiting more clarity for the pharma sector as well. Let's take this conversation forward with Mayuresh Joshi, Head of Equity Research at William O'Neill. Mayuresh, thank you for joining in. That's the thing. I was just looking at Bharat Forge's stock price. We'll talk pharma in a bit. But for instance, Bharat Forge, Baba Kalyani admitted to us that out of his total exports, 20% is to the US market. However, there's too much that's up in the air. They're also trying to, for instance, optimize their US plants. So even stocks that have exposure, direct exposure to the US, they haven't fallen off the cliff. Let's get the Bharat Forge stock price if we can. In fact, in the March move, the stock had a pretty decent rally. That's today. Let's pull up maybe a 1-year chart or a 6-month chart. March, the stock did really well. April, it's come off just about 10 rupees from the top. So my short question really is, should investors be worried about these kind of stocks, a Bharat Forge, some of these pharma names, large generic players that have exposure to the US?
Afternoon, Surbhi. No, to a certain extent, I think how the entire tariff scenario is going to play out is a large unknown at this point of time. And therefore, I think tonight's announcements will probably lay a base case scenario on what the Trump administration is looking at countries, at specific sectors, and the longevity in terms of these tariffs and the reciprocal tariffs that can probably come through as well via each individual country as well. Therefore, the risk factor here is that if the longevity of this tariff announcement continues without any negotiations on the table, companies will take a hit. There is no two ways about it. Obviously, I think it means that goods will be a little bit more dearer to the US consumer. And how does the US admin play that around? Is something to be seen. Obviously, for companies like Bharat Forge as an example, they have been diversifying, obviously from the non-US business, from the truck business as well, specifically the Class 8 trucks, more or less into defense and other areas as well, like railways. And therefore, I think the growth that can come through from these segments, whether that offsets any kind of incremental damage that the tariffs probably do, is something to be seen. And obviously, I think if this happens, as I said, it's an EBITDA and an EPS hit that these stocks do take. But again, I think out of all the stocks that you mentioned, pharma is one sector where our belief is as a house, where the tariff imposition should not be as severe as one probably hopes it might. Because ultimately, outside the US, India has the largest FDA capacities. If you're probably looking at the generic pricing itself, that is only possible because of the capabilities that have been developed by Indian pharma companies. And obviously, I think for new units to probably mushroom in the US, whether it's a new drug or an abbreviation of an earlier drug as well, I think it takes time and a lot of cost efforts as well. And therefore, I think pharma is one sector where the initial belief is that there might be a huge amount of impact that can come through. But our own sense is that this sector might be a little bit less gated. We continue holding, as a disclaimer, stocks like a Sun Pharma and a Lupin in our global portfolios.
Absolutely. Mayuresh, stay with us. We're going to take a quick commercial break here. There's 8 minutes to go for close. Markets are doing very well. 165 points, so recovering more than half of what they lost yesterday, at least on the Nifty. Back in just a bit.
Welcome back. Markets looking good, but the sector that's really bounced back today is the real estate space. And DP Realty is another stock that's up close to 13%. The sector on the whole, in fact, the index is the biggest gain, up 3% today. Mayuresh, anything you like from here?
Yeah, hi Nigel. So again, I think the real estate stocks are bouncing back with the announcement which happened after the budgetary session as far as Maharashtra was concerned. But I think we like the proxy players more at this juncture compared to the main developers, Nigel. And therefore, housing finance companies, as an example, stocks like a PNB Housing Finance, which has done exceptionally well in terms of reported numbers. The NIMs have probably remained far more stable. The expectations in terms of their emerging portfolio, which has a higher yield business, is expected to do really well going forward as well. And that should probably take center stage, because as that probably improves in terms of the overall pie, as far as their entire product mix is concerned and the segmental mix is concerned, the expectations in terms of asset quality pressures, specifically for this segment, I think a little bit older on as we speak. And therefore, I think better credit underwriting with expectations of lower cost to income ratios and better growth dynamics might actually keep these housing players probably more in the limelight. So something like a PNB Housing, a Canfin Homes, a proxy to the real estate players is something that we like at this juncture.
All right. What about the pipe makers? Mayuresh, we just put out a piece on Midcap Microscope on Welspun Corp. Talk about the mid and the small cap still being far away from its all-time highs, but this one's been making all-time highs. And normally the Welspun Group stocks are a little bit jittery when the markets get jittery, but that's not been the case this time around. They also have their unit in the United States itself, which will protect them from any kind of tariffs. Any view on this stock at around 850 rupees?
So very positive, Nigel. And again, I think a clear wisdom, we hold these stocks in our portfolios as well. You're absolutely right. I think they're expanding their capacities as far as the core US market is concerned. They're one of the top 3 players as far as the line pipes are concerned. And obviously, I think the kind of expansionary modes that you've probably seen across the globe in India, the entire context in terms of 11,000 odd kilometers being put through in terms of oil and gas pipelines, the Nal Se Jal Yojana, which is expected to garner steam going forward. There's a 70,000 crore allocation happening towards that. Saudi is having a huge earmark. It's already reflected in their order book as well. The US is having a huge order book earmarking as well, and they've got a decent order book out of that as well. So 15,000 crores worth of orders on hand. Revenue visibility is fine. The expectations in terms of their execution has remained steadfast, and therefore the margin performance has remained extremely solid and robust for the group as a whole. And therefore expectations in terms of the various lines of business actually doing well can actually augur well in terms of their earnings profile going forward as well. Ratings, ranking, institutional holding, whatever we cancel in, actually gets fulfilled on all parameters. So yeah, I remain positive and optimistic.
Okay, all right. Mayuresh got that. By the way, some of these consumer stocks are really going home with big gains, not just Tata Consumer, but even Kalyan Jewellers, V-Mart we've discussed, Bazaar-style retail. Lots of buying in the consumer space. Mayuresh, very quickly, 30 seconds before we run into close. Your favorite non-FMCG consumer stock?
I think hotels, ITC hotels. So I think everybody wants to travel. The industry is probably having the best quarter, which is expected to come in the quarter coming by. And therefore, I think the kind of enthusiasm that is probably getting reflected, the kind of demand-supply dynamics that still favor the industry as a whole, I think the hotel industry might probably do well going forward as well. So ITC hotels is something that we can do.
Okay, all right, Mayuresh, just stay on. We'll quickly recap the market close, and then we'll come back for some more questions. It's been a good day, and it's been a good comeback as well by the bulls. Finally, ending with a gain of almost 160 points on the Nifty. That's how this Wednesday is going. And the mid-cap market has had so much of a flare. It's done much better. The index itself is up about 1.6%. And the advanced decline ratio is very positive. 3 stocks advancing for every 1 declining. So good tally there. Let's talk about the large cap winners. Tata Consumer, 7%. Zomato's had a great run today, 5% higher. Titan, it's really consumer all the way. Throw in a Trent there as well, 1.5% on that stock. Maruti Suzuki has had a decent run. Then you look at some other names like Tech Mahindra, HDFC Bank. They've contributed, even Infosys. So IT is not too bad today. Most of these names are up and about. ICICI Bank has been supporting the market. So these are some of the key movers and shakers. Other gainers include SBI, ITC. So these are the other gainers. On the downside, however, BEL, because of the disappointment on the order inflow, they've missed their target for the full year. Nestle down on a brokerage note. Ultratech Cement, Power Grid, and the Bajaj twins, Finance and Finserv, they've seen some profit taking, but otherwise a great day for large caps.
Absolutely, it's a fantastic day for large caps, and a fair bit of gains sort of coming through as far as the bigger stocks are concerned. A good day, especially for the consumer names, as we've been pointing out. So Tata Consumer, Titan, Trent, Zomato, I mean, top of the list in terms of what did well. So all in all, a pretty good day, and interesting kind of setup as we head into